Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, July 2nd, 2013. Well, a change of trend today and a candle that's made a lower high and a lower low. Previous day's trading we had a change of trend to the upside, but I suggested that there was a possibility of a change of trend. For the previous day's trading, we had the sellers take control of the market by the close of the trading day, and we saw the buyers lose commitment as the market tested up within this window that had opened up a couple of weeks ago. Today's trading, we have seen that change of trend, as I've mentioned, but on a very indecisive candle. A candle with a lower high and a lower low, and a close basically in the middle of the candle, suggesting that neither the buyers nor the sellers have taken control of the market. So this is telling us a story on a couple of fronts. Number one, even though the trend has changed to the downside, the sellers have failed to take control of the market at the close of the trading, and that raises some doubt about continuation of the trend to the downside. But also the sellers have lost control. The sellers were previously in control for the prior trading day, and today neither side has taken control, so therefore the sellers have lost control. So that says something about the weakness of the sellers, but it also doesn't say too much about the buyers. It really says that there's a lot of indecisiveness in this market, and that's a doji candle, and doji candles are the most indecisive type of candles that we have, and that's because we have no body to the candle, so neither side has made any bearish nor bullish net progress on the day between the open and the close. And we also have this large shadow on the top and the shadow on the bottom, and that represents downside price rejection, the buyers losing commitment, and upside price rejection, the sellers losing commitment. Now, interestingly, the buyers actually lost commitment once again for the second consecutive day when they traded within the or towards this window and just to the edge of the window, and were strongly rejected from there. So moving forward, that will be a strong barrier to this market if there is going to be a change of trend, and there is a possibility of the trend changing back to the upside. But by the same token, the sellers lost commitment when they tested down below the bottom of the cloud, and that's exactly what we'd expect to see with the cloud. We know that anywhere within the cloud, especially around the edges, holds as areas of support or resistance. So a lot of indecision in this market. Obviously the round number 1600 has had its influence as well. The market has traded down to around the 1607 level, and the sellers have seen and the buyers have seen the 1600 round number down around there, and the buyers have thought, well, a little bit of value down around these levels, and so we've had the market rejected, and the influence from that 1600 round number is quite strong. In terms of higher above the resistance above the window, if the market can trade through there and close up through there, we do have resistance at the moment extending up to the bottom of this highlighted yellow zone, and that is where the top of the cloud is. That's around the 1638 level, and this highlighted zone, which extends up to about 1675, is a large zone where there was quite some strong support and previous resistance in this market. Down below the 1600 level, if we do see some solid bearishness coming into this market, and the market does close down below the 1600 level, we could see the market trading down to the 1576 level if the market can breach the Tenkan Sen, the green line here, and that's one of the Ichimoku indicators which now may act as support for this market if the market does trade down. Now, what we're actually seeing here with this indecisiveness and these small body candles is the market becoming disinterested. Basically, we're moving into the holiday period. 4th of July is a few days away, and we're seeing a lot of disinterest. It's highly unlikely that we will see any dramatic moves over the next day or two. Perhaps after we come back from the holiday period, we could see some breakouts in either direction, but at the moment I doubt very much whether this market will make a decent move to close down below the 1600 level, or even to break out up above the top of the cloud. Now, in terms of the Fibonacci extension, we're examining the relationship of the new first time frame downtrend to the previous time the market is trending down. Not a lot to tell here. The previous downtrend was one candle. We've had one candle of the new trend. Indecisiveness as the market interacted with the 100% level does suggest potential for a change of trend. And something similar with the Fibonacci retracement. The market has tested down through the 50%, through the 61.8%, exactly to the 78.6%, been rejected from there. Sets the market up for a change of trend. But where that trend is going to go, I'd say that the appreciation, if the trend does change, will not be substantial. In terms of Ichimoku, obviously a neutral market still. The market is trading within the cloud, so no clear direction in that very long-term time frame. We're waiting for a breakout down below or above the cloud for some clear direction. So let that guide any trades that have potential to be put on. But the market is still trading down below the Kijun-sen, the pink line here. So the market is technically still bearish in the medium-term time frame, but we're trading so close to it that the market is pretty much neutral in that time frame as well. Interestingly, we are trading a decent distance away from the Tenkan-sen now, and that has moved down in line with the trend moving down. There is a little bit of a lag, I think, here associated with this indicator, and the angle of it really is very much too steep to suggest that there has been some solid downside momentum in this market at the moment. But the market is still is trading up above that indicator, suggesting that we still have a bullish market in the short-term time frame. And for the last 3 or 4 days, we have been trading above that indicator. So that does suggest there is a possibility of this trend changing back to the upside. As I've mentioned, these indicators can hold as support or resistance. If we look at the Kijun-sen for the last 4 trading days, consecutive trading days, the Kijun-sen has acted as resistance to this market. So if we do see a bullish close up above the Kijun-sen, that could signal a decent change in sentiment in this market, and it may suggest that the market is building some decent momentum to perhaps test above the window or even to the outer edge of the top of the cloud, but we can't preempt the market. Let's wait and see how the market reacts to that level once again. I've already mentioned the downside here, 1600 round number support. If we can trade through there and close below the Tenkan-sen, we could quickly trade down to 1576. But as I've mentioned, we are coming into a holiday period. We will potentially have indecisive trading for the next few days at least.